Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend, and let's kick off a great 2015, folks. This is a quote by Marlo Giacadano. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials. The Dow Industrials are down 344. Nasdaq's up 78. S&Ps are off 34. Gold contract up $18.30, traded at $1,204 an ounce. Silver up 44 cents at $16.21 an ounce. Platinum up 10 at $1,212 an ounce. Copper down 5.5 pennies at $2.75 a pound. Light sweet crude getting smoked, toasted, roasted, all of the above, down $2.74, trading out at $49.95. Oil, folks, is going to go after. This is a mind blower. It's going to go after that 35 mark, and it's going to be fast and furious. It's just wild. Bonds, the ever-ready bond market just will not stop going higher. Higher bond numbers, lower yield. 10-year up 20 ticks at 127.25. 30-year, folks, which has been the strongest bond out there, dragging everything up on price, down on yield, just basically blew away the October 15th highs. We're up 1.5 points. We're at 147.01. We'll get back to that, but that's an ABC structure on the way up. This is a much larger ABC structure on the way up. King dollar up 237 ticks at 91.62. Now, what happened with King dollar is this. King dollar has been going after the 2005 high. That number is 92.53. We hit 92.05 in the continuous contract out here today. Bottom line, I suspect somehow, more than likely, it's going to get hit. That being said, however, what you absolutely have is that the gold contract and the silver contract is saying, you know what? That dollar more than likely is topping out. Gold's going higher, silver's going higher, the equities are going higher. They're moving with conviction, wide price spread, accelerated volume, all of the above. The thing that's going to get euro. Euro's down 63 ticks at 119.31, and the yen is off 96 at 119.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. You get your cash S&P down 39 bucks. We are at 2018. Now, you have the short-term run on this is that it wants to go into the December 16th swing point, the low swing point, which is 1972. That being said, however, folks, you're going to see this down into the 1820 area quickly. And this is what you have. 1820 is the October 15th swing low. That swing low hasn't got tested. That's the short-term picture. Large picture is some heavy-duty downdraft in an incredible way. So check this out. You know, depending on how long you've been listening, we looked at this before, and what you did is this. When we came down on the in October this year, it broke the long-term trend in the S&P. You came down with volume. You got down to 1820, broke the trend line with wide price spread and conviction. When you break a trend line, folks, whether you're going up or down, wide price spread and conviction, bottom line, that's where the market likes to go. In this particular case, as it had done 2 or 3 times in the last 2 or 3 years, it got right back inside the range again. So what did the S&P do? It goes from 1886, jumps back inside the larger trend, gets up over the 1951 into the 2018 level, gets back inside it. Then what does it do? Then you broke down once again the week of the 19th, got back inside it, and now what you're seeing is that you get another breakdown. Bottom line, that sets up longer term, we're 2019, 2019. This is setting up 1360 S&P, folks, okay? It's a big number. Dow Industrials. We go take a look at the Dow Industrials. What you have with the Dow Industrials is this. Dow Industrials right now are down 328. We're at 17,504. And the next stop is going to be the 17,000 level, which is December 16th. So you get the two separate benchmarks, December 16th and October 15th. October 15th is the 15,885 level. NASDAQ Composite. What do we have with the Composite? Composite, same setup. Composite is down 71 bucks right now. You are at 4655. And the December 16th is 47. 4116 is October 15th. That's where this baby wants to go. We look at the small caps. We'll use the IWM. If you're looking at the small caps are down $1.66. You're inside the lower range again. And the small caps are set up. We're at 117.24. That's set up for 103.54. Gold contract. What do we have with gold? Here's the divergence, folks, and it's monster divergence. The divergence out here has to do with the gold contract and the dollar index. Gold is priced in dollars, bottom line, and, 90% of the time, when the dollar is going higher, gold's going lower. The dollar goes lower, gold goes higher. Percentage-wise, what can happen is that, yes, the dollar can get stronger, gold can go sideways, dollar pulls back a little, gold goes a little bit higher, dollar goes higher, gold goes lower, and both end up actually going higher, but percentage-wise, the dollar would be stronger than gold. So we'll see where this whole thing shakes out. My take right now goes like this. The gold contract is set up, and it's a beautiful setup, folks, to run to 1316 to about 1347. And it looks to me like it's going to be a straight line move. We're up 1850 today. You have 137,000 contracts traded. The first swing point that's going to go after is the 1239. That setup, okay, when we bring that setup and we go over to the dollar index, what you're going to see is this. The dollar index got to a price point today of 92.05. The continuous contract, going back to 2005, is 92.53. Yeah, 92.53. We hit 92.05 today. More than likely, it's going to get hit. That being said and done, it doesn't matter whether it gets hit or not because gold wants to move. What my take is coming from this is that it looks to me like the dollar, this is the end of the dollar move. And what you have here is this. That would be a 100% move of a move that had started in March of 2008. That's when we were at the lows of 70. It goes from 70 to 92. What are we going to do now? Bottom line, I suspect you're going to go sideways, you're going to back off. We'll get more vision on what type of pullback the dollar will have once it does stop pulling back. What I mean specifically is this. When we stop pulling back in the dollar, if you pull back on lighter volume, that is saying, guess what? The dollar's going to go up and over those highs. Bottom line, stronger but dollar. You pull back off the highs and we pull back with volume, that would be saying you're going to have a larger correction. Bond market. What are the bond market saying? The bond market is saying, guess what? No matter what the Fed's saying, no matter what analysts are saying, interest rates are going lower, not higher. The 10-year out here right now is trading at 127.25. The last swing point is the 128.12. That was generated on December 16th. The largest swing point that this is going after is the October 15th level. And what we have done now inside the 10-year is also get back inside the larger range. That larger range, folks, is important, of October 15th. The reason being is that the bottom of that range is 126.21. We're already a full point inside of it. That's saying the 10 years going to 129. Well, 130. It's probably an ABC structure on the way up. Check this out. This is intense. So your A point would be 122. Let's call it 123. Your B is 130. You're talking $7. You're talking a 132 in the 10-year. And what we have is that 10-year is at 2.03. By tomorrow, we're going to be under 2%. That's going to give you a 30-year mortgage, folks, at 3.9, 3.8. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow's down 329. Nasdaq's up 72. S&Ps are up 40.